Hello, everyone. Happy Tuesday, the 28th of March. And surprise, surprise, you thought I was done. And to be honest, I thought so too. However, a few days in Disneyland got the best of Dave and it sort of knocked him out, together with his entire family, as I understood it. So I hope they'll get well soon. And you have got to deal with me again today. Welcome to the show. Let's see what the markets had to say on this Tuesday. And if we can find this sort of non-event narrative, which is going on for 2 days already, in some sort of a scenario to work from going forward. Ladies and gentlemen, once again, this is the final bar. Hello, everyone. My name is Julius de Kempenaer, and I'm presenting to you from Amsterdam in the Netherlands. And as you may have noticed, I am jumping in last minute here to cover for Dave as he is fighting off a nasty bug. In case you're watching, my friend Dave, please get well soon. All your friends here at the final bar are eagerly awaiting your return, and so am I. On this Tuesday, we're going to look at what happened in the various markets. We will look at sectors, maybe some breadth metrics, currencies, or pretty much anything that pops up in my mind as we go along. This is a lot less scripted because it's last minute, so God knows what happens. Of course, we will be using the toolkit as provided by StockCharts.com. There's various formats, indicators, breadth metrics, trend lines, Chart School articles, etc., etc., etc. Today's guest is Brian Shannon from Alpha Trends, and I'm really excited to be able to be interviewing him. I've met him only once, a super interesting guy, has written 2 great books, and I actually have them here. So if you don't have them, here is the Anchored VWAP. That is his latest book. And the first one he wrote is Technical Analysis Using Multiple Timeframes. And those of you who have been watching the final bar, sector spotlight, know that I always try to match RRGs of different timeframes together, so weeklies and dailies. And we're going to talk to Brian and see if he can give us some insight, of course, about the Anchored VWAP, which he is the master and some sort of his trademark, his go-to indicator, but certainly also maybe he's got something to say about using multiple timeframes. Let's go and see what the markets had to tell us today. They've just closed, and it's there you go. I call this unchanged. I'm not sure about you. Maybe someone's getting very excited about 40 bips gain in the NYSE or 45 bips decline in the Nasdaq. For me, that's not really a big deal. If you look at the sectors, then energy pops out at the top at 1.5%. Communication services at the bottom at 0.8%. To be honest, with markets doing pretty much nothing over the day, and already, since I've been presenting the final bar since last Wednesday, I don't think we ever had a super big moving day. So just a bit of a pity, because then you can really use the toolkit to your advantage and see if you can find any meaningful changes in the narrative. And if markets are not really working with you, then you got to sit on your hands. And that's probably one of the most difficult skills of a trader, to do nothing. A lot of us are sort of gung-ho and they want to pull the trigger all the time. Well, maybe sometimes it is way more sensible to actually wait and be a sniper and execute your trades when something is really happening, instead of trading just to be trading. We go over the markets here. So here is the 30-minute chart of the S&P. I'll work my way through these major indexes, major asset classes, using 30 minutes charts, so we get a little bit of a history and feel of what happened over the last couple of days. And you can see here, so this is the 21st, 22nd is when I started presenting. We had that big move here on the 22nd. In the end of the day, if you look back on the 21st of March, not much has happened. We look at the last 2 days, there's a little series of lower highs and lower lows that is intact. So based on this pattern, we may see a little bit more downside in the coming days, but I don't think it's going to be a massive decline as of yet. I don't see any evidence of something really big under the horizon. We go to the Dow Jones Industrials. That's a little bit more of a toppish formation. I call this a little bit more toppish. So if I connect that to the S&P 500, I think that this also points to a market that will move a little lower over the next couple of days. But as you can see, there's already support coming in around 31,800 or 31,400, this area here. There's lots of support levels at intraday. On the upside, on the other hand, 32,600, and it's this low here, that looks a lot more interesting. If we can take that out in the next couple of days, then there is certainly more upside to be gained. Looking at the NASDAQ, that's the sort of has been the go-to market, technology as a sector. When the market started to come down, tech is behaving like a more of a safe haven. Not today. It's actually one of the weaker sectors, weaker markets. A little bit of a pop-up here. And you can see that if I look at this move here from the 13 onward, this certainly looks like a sort of a toppish formation to me. So stock markets in general in the US, I think that we have to take into account that we could go a little lower. My longer term narrative, if you've watched Sector Spotlight earlier today, is I'm still in the camp of a bull market, or a market that is turning around that downtrend that we've seen in 2022. One chart that I really want to share with you is the chart of IEF and basically bond markets in general. Remember how last week we talked about that 100 level that was important for IEF and how it would be a good sign if that would be broken to the upside? Well, that happened last Friday at the open, but then immediately market was pushed back. Immediately sellers came in and pushed it back below 100 again, or around 100. And then on Monday, we had that big drop and we're still following through. So that resistance area around 100 is definitely still there. If we look at the TLT, which is the longer term bit, you can see that that's resting at support. And so is SHI, the 1 to 3 year bond, is kind of in the middle. So the yield curve move, the steepening of the yield curve, as we discussed it last week, is still ongoing. But the market is now, the entire curve is now being lifted a little bit because of the decline in these ETFs, the decline in these bond prices. Yields have been shifted upwards slightly. If we quickly move to some sector work, then here is the intraday RRG for the 11 S&P sectors. This is a 30-minute RRG chart, and what I like to see, or what I'm happy to see, is the return of XLC and XLK from lagging back into improving. If you do longer term work on relative rotation, you will see that XLK and XLC are the only sectors inside the leading quadrant, and they are actually sort of carrying the market right now. Market is, as I said, I'm sort of in the bullish camp, in the transition from bear to bullish, but the base of the market is still very narrow. It's pretty much carried by just technology and communication services. And I think that base is too narrow to go into a full-fledged bull market. So we do need other sectors to step up their game and to pick up again. One of the sectors that would be really helpful would be consumer discretionary, of course, because that's a really big sector, but also financials. Financials about 10% of the S&P 500. So that's also really an important sector. And if you look at where they are right now, so financials is inside weakening and it's rolling right over. So we really need that to actually start pushing back up, and not only on the 30-minute chart, but also on the daily or on the on the weeklies. We quickly go over the moves of the individual sectors. And let's do communication services here. You can see how that has been rolling over. If you would draw a horizontal line here, that support is now broken. We came out of that horizontal barrier, that horizontal range here. So it looks as if we're sort of setting a new range between 55.50, which we also found here early March. I wouldn't be surprised if we could see XLC moving a little lower. The longer term picture, however, is definitely on the upside for XLC. So if you look at these 30-minute charts, I'd be looking for buying opportunities here. If this sort of turns around, for me, that would be buying opportunities. And the same, I look at technology, XLK. The breakout level was 142, 140, 142 that you can see here. These peaks, these lows. And we're, at the end of the day, we set the bottom today. We kind of completed a small double bottom. There's a little bit more work to do, but the upside for technology is definitely still there. One thing that I want to share with you really quickly is something that I do for myself, and this is a daily show, so it's short-term trading. This is based on a scan based on the turtle soup strategy that was developed by Larry Connors and Linda Reschke. I've got a scan. I've written an article about it. I will put that in the description of the link. If you run that in ACP and create a setup like this, you get very nice trading opportunities. So one that really hit me today was POWI, Power Integrations. The setup occurs when the low during the day drops below the previous 20-day low. In that case, it was 79.48. That happened somewhere in the first 2 hours. And then when you get back above that 79.48, maybe like 80.20, 80 whatever, a little bit at your discretion, that's your trigger, that's your buy signal for a move higher. And that worked very nicely today in POWI. And another one that worked very good. So this scan was run sometime around noon today. And another one that worked very well here was NXPI. That's a nice Dutch company trading on the New York Stock Exchange, or NASDAQ, I've got to say. So a little bit of Dutch pride here. Triggered about 170.50, and we're currently trading around 173.30. We're going to wrap up this market recap here, going to a quick break, and after that, we're going to talk to Brian Shannon, president and founder of Alpha Trends. And welcome back, everyone. Once again, my name is Julius de Kempenaer, and I'm presenting to you live from Amsterdam in the Netherlands. A few quick comments before we go to today's guest, Brian Shannon, author and founder of alphatrends.net. First, I'd like to encourage you to send in your questions so they can be answered live on air. Our email is thefinalbar@stockcharts.com. You can tweet us at @finalbarsctv, or you can put a comment below the videos if you're watching us on the YouTube channel. Also, I'd like to share the guest that Dave Keller, sorry, Dave, I gotta laugh. I'm not sure whether you can make it. We'll be interviewing the rest of the week on the Final Bar. So it's going to be up in the air whether that's going to happen. Tomorrow on Wednesday, March the 29th, we will have Kelly Cox, an investment analyst at eToro, on the show for the first time. So that's going to be interesting. On Thursday, March the 30th, it's head-to-head for Dave and Dave, when Dave Keller will be talking to Dave Landry of davelandry.com. And when historical results provide any guidance for the future, that should be good fun. Now, let me introduce today's guest, Brian Shannon. Brian is the founder and CEO of Alpha Trends, an online swing trading analysis and education community. He's a full-time trader, and when the markets are closed, he is an inspirational educator and the author of 2 books. I just showed them to you. The first one, Technical Analysis Using Multiple Time Frames, is a couple of years old already. And very recently, he released his new work of art, I should say, Maximum Trading Gains with the Anchored VWAP. And the Anchored VWAP is really what sets Brian apart from a lot of the other analysts out there. It's become some sort of a trademark for Brian, and we're going to talk about it right now. Brian, welcome to the show.
Julius, thanks for, what a pleasure to see you here instead of Dave. I always like Dave, but, it's good to see you as well. Thank you for having me here today.
It's my pleasure, man. It's my pleasure. Hey, just to cut right to the chase, I have to admit, I've got your books. I read a little bit in it, but I'm certainly not an expert on the Anchored VWAP. What I know from VWAP is when I was trading on the dealing room, we would get orders from institutional investors, and we needed to execute them, or we would settle the trade at VWAP, and that was the VWAP during the day, the volume-weighted average price. And that was always a battle to make sure that you could beat that VWAP, because that meant that the bank was making additional money on the commission. But you created the Anchored VWAP. Can you tell us, like, in, I don't know, 3 minutes, how short you can, what that is and what it actually does.
Sure. You have it absolutely right. I mean, that's what the VWAP was designed to do in 1988 when it was invented, is an institutional benchmark. As far as, an institution saying, well, how do I know if I got a fair price for the stock? And it was defined loosely as the price a naive trader could expect to receive during the course of a day, because it's the average price adjusted by volume that the stock traded at for one day. So, like you're saying, if the company had to buy 500,000 shares of a stock that traded between 48 and 50, the VWAP might be 49 for that day. But if you came to them and said, "Hey, I screwed up, I got it at 49.50," they're not going to be happy with you. But if you instead, got it at 48.25, the bank would make a lot of money. You'd get your bonus, and everyone would be happy. So, the anchored VWAP, I didn't invent. I've kind of popularized it. It was kind of something that went to sleep for a long time. And I had noticed it in about 2003, just kind of fooling around with the chart and looking at it, like we do with a lot of these things, and say, well, what is this? What's going on here? So the anchored volume weighted average price is, as you know, available on ACP charts, where you can point and click to the place where you want to measure that volume weighted average price from. So, for instance, on this NASDAQ chart that you're about to show, we've got the anchored volume weighted average price. The green one is from the low this month. So that tells us, adjusted for volume, the average price the NASDAQ, the Qs have traded at. I can't read that, but I think it says 302.82 or so. Yep. And that is the average prices traded at since that low. The average price from the high in February, and the high for the year is not that, was that the high? That wasn't the high for the year, was 300.37. So there's price memory in that area, and it tends to act as support and resistance. So looking at this 65-minute chart, we're currently in a little bit of a pullback mode. So I anchored a VWAP, that red one, to the high, which was also where the Federal Reserve had their announcement. You can see, we're below that. So money is flowing out of the market since that event, and it's coming down towards that 300 to 302 level maybe. And I think that's where we could expect that this little sell-off that just commenced the last couple of days could likely find support before it decides whether or not it wants to go higher again.
Yeah, makes total sense. It's like what I said in the market recap. We've got a lot of these indices that look a little toppy, and I think the Qs here are in a similar, I could sort of imaginary draw a little trend line here that's broken, lower highs, lower lows. So this level here, what I noticed is also nicely lining up with previous highs and lows, probably not coincidental.
Yeah, probably not at all. I mean, that's where there's price memory, where there was a lot of volume traded in the market. So it's going to, be attracted to that and create that level, that VWAP in that area. And it provides us an accurate picture of the supply and demand. It says from the point where that red anchor started, the average price since then is 309.42. So the average participant over the last couple of days long is down about $2.30 per share. However, the average short seller is, ahead by that amount. So we can gauge, when do the buyers regain control factually. Factually, if the market can get back above and hold above that 309.42, it tells us the average short seller from that peak a couple days ago is losing money, and they might be motivated to repurchase. And it also says that the buyers are back in control, so the longs might get a little bit more aggressive and average up, because now they have control of the market. And that's 100% factual. There's nothing, there's no art to really reading it. The art is in where you measure from, really.
Yeah, I was going to say, I think it's pretty crucial. I mean, like with a lot of indicators, a lot of people I found over the years are using indicators or technologies very, very loosely. I mean, people see divergences all over the place. People see a head and shoulders pattern in like everything.
Right.
I think that with an anchored VWAP, the crucial part is, of course, what is your starting point? Where do you start? Where do you click that starting point? I mean, that has to be a significant higher low to make any sense, right?
Yeah, so oftentimes it will be, a significant higher low. And the most recent high here in the NASDAQ also coincided with an event, and that was the Federal Reserve. That's where we saw that volatility there. So oftentimes from an event, whether it's a Federal Reserve for the overall market or whether it's a CPI or, whatever economic report will often have, at least for a few days, significance. Year to date, month to date are often really good measures as well, and from significant highs and lows. So that green anchored VWAP has the potential to say, are the buyers going to, step up and defend that level from the lows where they got aggressive? So, we don't put that green anchored VWAP there that day, of course. It's only in hindsight that we put it there. So it's maybe a day later that we put it there and say, that was a significant low. Let's start to measure and see if it's significant. And it has, in fact, become significant. So we leave it on there to say, how will it respond the next time it comes down and tests that level? It has the potential to become support, but it's just like anything in my mind, any, support or resistance level, it's a potential area where the buyers and sellers might congregate, and we can see a switch of sentiment, but it's not necessarily an action point. Sometimes it's the exact turning area, but to me, I look at it and say, that's where I want to get interested. That's where I definitely wouldn't want to be adding shorts, and I would start to cover shorts in that area as potential support, and maybe look to see for evidence that the buyers can regain control. And maybe, Julius, that's going to trace out a cup and handle with the cup going from the top of the blue to the red, right there. And now it's maybe tracing out its little handle. So you just combine it with all the traditional technical analysis, like the prior resistance you pointed out, and it just gives us a little bit further confirmation and confidence in what we're doing, which ultimately can hopefully help us make more money in the market.
Yeah, I mean, it's another piece of the puzzle.
Yeah.
Like JC always says, I build puzzles, and I completely agree with that. Every day we build puzzles.
I like to solve puzzles.
Every night someone comes in and just smashes all the pieces all over the table. I don't know why
That's
that
true.
is.
Yeah.
Hey, we got two more charts to work on. So you brought Maxeon Solar for us. Tell us about what you see here. This is a weekly chart, by the way.
This is a weekly chart, and that goes back to the IPO. And what you're seeing there is, I just put a 40-week moving average on there to say that, generally, the longer term trend is controlled by the institutions in direction of the 40-week or 200-day moving average. And when the 40-week or 200-day moving average is declining, I'm looking at it generally as guilty until proven innocent. Well, you can see here over the last several months, that 40-week moving average has been an area where buyers have congregated and defended it. And we saw a higher low just a month and a half ago. And then we saw that big pop up. Now, that big pop up just 4 weeks ago occurred, you'll see it on the next chart, on heavy volume. And that was an earnings report. So, if you look at that, what you see is that big move higher. Now, that green anchored volume weighted average price is a VWAP I keep on all my charts, and that's the year to date anchored volume weighted average price. And the interesting thing is, you can see that this after this gap higher, it had a normal pullback, and it found buyers precisely at that anchored VWAP a week and a half ago, that green line. Now, again, I don't look to buy there. I look at it as a level of interest. The blue line is the volume weighted average price since the company reported those earnings, since we saw that big volume event. So going back again to where to anchor from, anything that acts as a catalyst for the big shift in the supply and demand dynamics, like an earnings report, or maybe it's an FDA report or whatever it might be. But right now, what we know is, the stock gapped up. It ran 3 days. We saw some normal profit taking after a big gap up. And so far, the sellers have maintained control. Now, not very convincingly, because we're right up hammering away at that anchored VWAP from the earnings. If it can get convincingly through that and get up through there, it will tell me that anyone who started to short this stock doubting the breakout is going to be in a losing position. They might start to cover. Sideline money like myself is looking to buy, not the breakout above the prior high, but if it can get above about 25.60 or so, if it can get above there, then I want to buy it. And I would put my stop underneath the most recent relevant higher low, which to me is right there 3 days ago. So
Brian, we could go on forever. I had a few questions prepared for you, so we really have to do this again.
okay.
We got to wrap it up. We're running out of time here. Thank you so much for being with us and explaining your anchored VWAP and how you look at markets. I really like what you do, and I'm so looking forward to meeting you in New York next month, man.
It'll be great to see you again, Julius, and sorry for running over there. I get excited about this.
Don't worry, I completely agree with that.
All right. Thank you.
We need to go to our 3 and 3, and I picked a few charts. You're looking at the big movers of today, and the first one, this one actually was interesting because this is Ford F. So what I see here is a pretty big symmetrical triangle after a big decline. So you can see how the falling resistance has 3 touch points, and the rising support immediately now has 4 touch points. It's becoming more and more narrow, becoming more and more interesting. Either way this breaks is probably gonna create a bigger move in the direction of the breakout. Now the problem here is that for a valid triangle, the breakout needs to happen around 2/3 of the base. And you measure the base from right here to where these 2 lines converge, where the apex is. So you can see that 2/3 is probably right around this period of time. If we don't get out of that triangle within, let's say, the next 2 to 3 weeks, then that whole pattern is off, it's void, it's of no value anymore, and we probably go into a trading range. If we break on either side, you can expect an accelerated move in the direction of the breakout for Ford. The second chart in my 3 and 3 is CCL. And CCL is, as you can see here, the longer term chart is actually coming down from a longer downtrend. And you can see that since October, we started to move in this kind of rising channel, very shallow, not very much, but it is rising. And you can see that the highs, the major highs are all higher, and the major lows are all higher. But what you can also see is a little, what could be seen as some sort of a flag, as a rising flag. And a flag in this type of constellation would be a negative pattern. It would be a continuation pattern. So we're on the verge, on the fence here for a move in either direction. I think if this support holds and CCL can take out the recent high and can get above that 20-day moving average, then we're in for a rally towards the upper boundary of that slowly, shallowly rising channel. If that flag is broken to the downside and subsequently CCL breaks below this rising support line, then we can probably see an accelerated move lower for CCL. And I'm quickly going to actually show you that weekly chart so you can see how that is actually at very serious support going back to the early 2020, the Corona dip, so to say, Corona decline. And here we are building this big support base. So if we stick back with that daily chart, my preference would be for a move upwards. I think that would fit the narrative and the constellation of the chart better. But be aware, in case it moves down, we could be seeing an accelerated move lower. One more chart in the 3 and 3, that is monolithic power. This is very heavy resistance and to move up. We got to go, ladies and gentlemen. This was so much fun. Ladies and gentlemen, thank you very much for staying with me. Please have fun. Thank you for watching the show and hope to see you again.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.